The panel that we're taking today is going to be around cross-border payments and how difficult it is to move money cross-border today and how stablecoins is going to be able to solve it. We're going to be talking about how hard it is to move money across borders. So I'm going to start with you, Guerra. For example, traditional money movement for payment providers requires a big lock of capital on the other end to be able to do the disbursements properly. Yeah. So among those examples, why do we need to solve the challenge?
Yeah, so the challenge it's a big one, right? So in the UK, we're very lucky to have faster payments. In the US, I don't know if you're lucky, but like ACH works. In Africa, we're looking at a region that is incredibly highly fragmented, right? So a minimum of 54 different currencies, right? Different regulators, multiple languages. So solving for payments is something that the simplicity of it kind of maps onto also how the region is set up. Why is it important for us to solve this problem? I think that Africa has a ton of, so I'm Ugandan, and it's a region that has a ton of potential. Right now, the way that payments works is, now let's look at the history lesson as well, colonialism. It maps nicely onto how payments work right now. So it's for someone in a bank in Kenya to pay a bank in Tanzania, those funds maybe using SWIFT would need to go to the UK and then routed down to Tanzania, or you're using market makers to do a OTC swap between two currencies. It's not as seamless as we'd like it to be. So stablecoins provide a layer that, and blockchain provide a layer that enables that to happen a little bit more seamlessly, and also a little bit more less friction between multiple entities being involved in the payment. So it's a very long answer, but yeah, there's a desperate need. I think we wouldn't be in this room, all of us, if we disagree. But we agree that payments does need to be made more simple, and Africa is kind of like a really juicy space to figure out how to do it better.
Indeed, it is. Nicolas, why do you think we need to solve this challenge from your perspective?
Yeah, I've got a personal and a professional interest in solving those problems. I obviously was born in France, lived in Australia for many years, now in the US. I've faced this problem of, how can I move value and money from countries to countries, from wallet to bank to wallets, wherever I want to receive the money or send the money to, I should be able to in a secure and more native way. So at Lightspark, for example, we believe that we should create this more open money network where money can move natively on the internet age and connected world that we live in, instead of relying on all the infrastructure that's been designed in the 60s or 70s, like SWIFT, for example, and that doesn't provide that compatibility across wallets, across banks, or across countries. That's one of the main reasons why we believe we should create this open money network. Obviously, fees and the time it takes to actually settle, especially on the receiving side for you to actually receive the money, is obviously a challenge that B2B businesses, individuals, or even AI agents at some point will be facing. So we're really excited about solving these issues, and we believe that stablecoins and the compatibility of more unique, modern, sophisticated settlement layers and payment rails connected to more traditional banking system where most of us still want to receive the money is critical.
Yeah, and what impact do you think that is going to have to the global economy and the GDP, Thales?
Yeah, so I think there are three aspects on the equation. So the first one that actually Ed mentioned is the lockup capital to do those remittances. So for example, I don't know if there's someone from Wise here. I'm a customer of Wise. I lived in Brazil. So every time I need to top up my card, I do this. You have like this crypto feeling, but in the end, they're using their capital here in the UK, in Europe, to pre-fund my account. And it's estimated there's $4 trillion in locked up capital. So right now, interest rates are high in the US, 5%. Okay, when it was zero, people say, okay, that's not a big deal. But if you see, most of the remittance, they happen in emerging markets. And in Brazil, the rate is 12, it's gonna be 8. So I think this is one factor. The second one is the spread. If you see in the corporate world, the average spread is around 1.5%. In the retail, it's 6.3. So we can do this in a fraction of the cost using stablecoins and blockchain. And the third one, in my opinion, is the fee as well. So Stripe was mentioning like the 5 cents per transaction. Some networks could be even $1 cent. But like in the Swift network, the average is $12, which is a lot. So Swift itself, I don't think it's terrible when you do with bank to bank. So last week I was talking to a big bank in Spain. They have their subsidiary in Brazil, in Spain, so they can move money very efficiently. But we have all the correspondent banks. There are 11,000 banks connected to Swift. That's when the mess starts and blockchains to cut those intermediaries.
And from your side, Elizabeth, what do you think will be the impact to the economy, global economy, and the GDP?
So remember, guys, obviously cost, obviously speed, but 4 times a month we have a weekend. And during this weekend, businesses can't settle. And any business that's a small or medium-sized business then has to take a 2-day risk, working capital for 2 days. I process for 40 of the biggest remittance companies globally. Every Friday, my traders are biting their fingernails off unless these guys are settling in stablecoin. It's wild that planet Earth in 2024 is not a 24/7 settlement society. Now, we love Nigeria, which has 24/7 settlement for a long time. We've been in the market since 2015, but that's just not the case elsewhere. And I really echo what Stripe said. Memorial Day is not a holiday across Africa. And guess what? At the turn of the century, most people on planet Earth will be African. So why are we still mandating those holidays for everyone else? Because those holidays and those days off translate directly into business risk. It translates into credit risk, counterparty risk. It translates into working capital, access to finance for a lot of these businesses, and it holds a lot of people back. That's number one. The second thing I would say is that stablecoins are not there yet. We trade a lot of stablecoins, but on the other half of the trade is an actual fiat currency. And so we still have this, 11 years ago, everybody said Bitcoin will be everything. And now we're hearing stablecoin is everything. We still have a good long time where fiat, rails are needed. And in that situation, without stablecoins dragging us forward, we're still relying on the club of 11,000 banks. And a lot of mid-sized fintechs are not allowed into Swift. So again, that's an extra layer of the vertical. So I think when you're thinking about translating from fiat into crypto, fiat into stablecoin, if we're not allowed in that club, that's another rung on the vertical, which means cost, which means working capital risk, settlement risk, and then again, exclusion if you're challenging the incumbent.
That is correct. And looking at stablecoins, we're all talking about the network of networks that would enable connecting different fiat pairs together. But as you said, it's a matter of how much liquidity you're going to have in either end and how you're going to make it happen. But if that evolves to a place where it actually can be the network of networks, how do you think that would impact to the global economy in terms of accessing new customer verticals and new global customer sets?
Well, instant settlement and low barrier to entry. Now, the reason I started this business and was using Bitcoin in the very beginning was because I was a 30-year-old founder with kids as a female in Nairobi, Kenya. I wasn't the traditional founder. How would I make a payment from Kenya to Canada? It was impossible for me to get access to Swift. It was impossible for me to sign a Visa deal, but there was a very low barrier to entry to enter crypto. Now, all the compliance people are going to say, what if you were a drug dealer? Actually, there's a lot of good-natured, well-meaning business people that want a low barrier to entry. So just one, the amount of challengers and new businesses that can come online if you have that low barrier to entry into the market. And the second thing is just the cost of doing business. I'm obsessed with operating expense ratios. And you just see when we use mobile money in East Africa, that dropped almost 80%. And when you use stablecoins, it drops even further. So new businesses entering this space, lower cost of sales and operating expense, and just, the ability to welcome more voices and more people in this global economy. We're a 24/7 global economy right now, so we shouldn't have only 11,000 members.
So how about you, Nicolas? How do you see that?
Yeah, no, I echo, some of the points that's been mentioned. In this world of an open 24/7 settlement layer, we believe that new payment use cases will be enabled either in, part of the world, for example, in Africa, as it's been mentioned. We're working on some use cases between LATAM and the US, for example, where some people spend a lot of time between the two, part of this world, maybe living in the US for part of their working life, sending money back home in Brazil or in Mexico. Enabling, these money to move faster. People can actually get paid if they're a Uber driver in the US, can get paid at the end of each Uber ride, and then get paid in USD, and then automatically or seamlessly be able to convert USD into stablecoins, and then sending some of that money back to Brazil to pay, their daughters' students or everyday expense, for example. So that real-time getting paid in whatever currency, in whatever bank account in the US, being able to send money automatically through stablecoins into a local currency on the other side would unlock additional spend and transactions in multiple parts of the world and in multiple B2B or B2C transactions.
So, Guerra, let me ask you, we see the stablecoins primarily being used with with a dollar-denominated approach. How do you think that will benefit in Africa, for example?
Touchy question, because with the conversation of dollar comes geopolitical concerns, but let's put that aside. The dollar is a currency that if you are in Nairobi or if you are in Lagos or Karachi, people would rather have a dollar than hold another currency. So again, like as a Ugandan, I grew up, my dad did a lot of business with Kenyans, but they always had to settle in dollars because the Kenyan does not want to hold the Ugandan shilling. The Ugandan doesn't want to hold the Kenyan shilling. Again, because it's difficult to get rid of, right? Or difficult to spend. Just think of it from first principles. Dollars have provided a global vehicle for trade, right? And this is this is visible in the fact that we have multiple iterations of the dollar today. We've got the US dollar that is issued in America. We've got the euro dollar, which I've learned today actually is mapped to the petrodollar, which is also used globally. So the fact that the dollar is so trusted and is so liquid globally is really important, something important to consider. In Africa, a USDT or a stablecoin is way more liquid and way more accessible than a dollar from a bank to the regular person on the street, also to small businesses. So having dollarized stablecoins is something that I believe is propelling a lot of growth with regards to trade, with regards to remittances as well. But we still do have problems at the fiat last mile, right? So that's like what Elizabeth mentioned, the other side of the trade being local currency. We still haven't quite, like, as a financial services payments community, nailed that piece yet. But yeah, dollarized stablecoins are very important for our region, and we're also starting to see African stablecoins crop up that will likely have liquid, pairs through DEXs or various centralized market makers to do swaps. But until we're at a point where a Nigerian Naira stablecoin, a USD stablecoin, a Mexican peso stablecoin are able to be easily transacted, we haven't quite solved that yet. But it's I think it's very important.
Just real quick on this, I think a synthetic version of a lot of the African currencies is a really great half step towards being able to do forwards. We're still majoritively like a spot trading, which is wild, that except for the South African rand, you can only trade African currencies spot in any sort of deliverable, like an efficient way. So to have a derivative, a stablecoin derivative, and develop that market. I know they're doing it in Brazil right now, which is pretty cool, which is, how do we get EM currencies to do more derivatives on more FX products? And I think that's a great, amazing use case that we didn't have a couple of years ago.
That is correct. So Thales, in Brazil specifically, right? How do you see that impacting the fact that the first one was the dollar, but Brazil reacted with Brazilian token. How do you see that working? Do you see the FX market working?
Yeah, so in Brazil, it's the central bank governor, just to give you context, the guy used to mine Bitcoin 3 years ago. So he understands a lot about the technology. I see Circle here, you guys did a great event 2 weeks ago in Brazil. So the country's booming, like embracing innovation from tokenization to stablecoins. So the central bank gonna release a public consultation in September, doing like exercise how stablecoins can become like official way to transfer money. So I remember when I got at Bitso 2 years ago, we submitted a paper to the central bank that we can do a settlement in a smart contract that you can deduct the tax, you can have the KYC information embedded. Those guys said, look, what is this? I don't want to speak with you. They shut us down. 6 months ago, they call us and say, okay, this is interesting and it's coming. So it's not just in Brazil, like Argentina as well. That's one of the most fascinating countries. You see a tax driver there, they know the difference between DAI, USDT, USDC. And stablecoins is becoming like this parallel currency. And one of the things I'm proud of the most is last year I had a call with a AAA company. They were so desperate to take money out of Argentina, they considered crypto. I know it was a long shot, didn't happen. But this year, we have a blue chip company taking money out of Argentina with Bitso, with our rails. We traded $2 million yesterday. So this is great.
Right.
And in Mexico, it's our home country, right? We have Felix Pago Cloud is here, that they use our infrastructure to move money away. So I see LATAM, the reality that people talk about crypto in LATAM, but it's about stable coins.
Yeah.
In Brazil specifically, 80% of the volume are stable coins.
And just a couple years ago, we were doing a partnership, Bitso and us, with one of the largest remittance companies. And we were using Bitcoin back then. And they launched us both at the same time because it was so hard to get them on board. And we were trading on Skype on the weekends, remember?
Yes.
This was like 9 years ago. And it was just so clunky. And it was so hard to get it through all their investment committees, but they still did it because it was better than the regular rails. So just even then, the will and the desire to have a better solution, and now stablecoins have brought us so much further.
100%.
So we're going to shift gears, and we may have to summarize our answers to bring time, to end at the right time. But I want to shift gears to technology. Nicholas, can you share more about the tokenization that is happening on Lightning and how it will change things and why it will be so powerful?
Yeah, I think John mentioned that, John from Stripe earlier mentioned a view that there is a proliferation of tokenization and stablecoins happening right now. And who knows exactly which stablecoin would be right for what type of use case. I share the same kind of thinking that we need to be kind of neutral, especially us at Lightspark as an infrastructure layer. We want to support as many stablecoins as we can to allow the right use case to be used with the right technology and the right stablecoins. So we support a protocol on top of Lightning to be able to support stablecoins. I know there's a number of efforts for multiple companies to support stablecoins on Lightning. We believe that Lightning is the right infrastructure layer, open 24/7 as the settlement layer, and there will be different tokens, different currencies enabled on top of that, used for different use cases. So we try to be that neutral and supporting multiple use cases.
So Guerra, will the future of cross-border payments be multi-chain?
100%, yeah. Will the future of email be multiple email addresses like Gmail, Hotmail? Yes. So it's right now clunky and difficult to ascertain which is best, which is, but at some point we will be able to build experience layers on top of multiple blockchains to find the best route for whatever it is that we're doing. So at OnAfriq, for example, we are heavily focused on partnering with L1s, infrastructure providers who are enabling us to just settle instantly. So we do have an integration right now already. We're working on another one that is enabling instant settlement, which has really significantly shifted how we do payments. But to answer the multiple chains, 100%, yeah.
So Thales, moving now to the use cases, right? Is there any specific use case of a stable coin in the cross-border world that is exciting you today?
Yes, I'm going to mention the Felix Pago one was a great partner of us, and they have a great UX. So they use WhatsApp for Mexicans and everyone in the States that they want to transfer money. And they also use Zero Hash as a counterpart. And they use Bitso to convert those USDC into Mexican pesos. And since Bitso is direct connect to SPAY, to instant payments, we can do real-time payments. So I don't know how it takes, but it's like minutes that someone in the States, they can do the transaction, they liquidate through our pipes in Bitso, and we disperse this money through SPAY 24/7. And as you mentioned about the settlements, there's a lot of holidays in Latin America. In Colombia, there are 18 holidays. So it's super important, and clients, they want to have access to their money 24/7.
Those are always the biggest remittance days too, because they're holidays. So it's like the highest volumes or when the markets are closed.
Correct, yes.
So Elizabeth, to close the panel, according to the World Bank, remittances flows into sub-Saharan Africa stood at 53 billion 2 years ago. Can you share more about your funding story and why African Corridor is ripe for disruption?
Yeah, when I started 11 years ago, it was 34 billion.
Wow.
So we've grown 20 billion in a decade. And I wouldn't say this is the highest growth decade we've ever experienced. So this is where the growth on planet Earth is happening right now. And when we started, margins were, or cost was double what you saw in South America and Southeast Asia, which were comparable. At this time, we still see from the traditional players double the cost. So when we showed our business model to a lot of investors, they said that our margin wasn't defendable. Here we are, we're still one of the lowest cost providers in this space, and it's the exact same margin we had 11 years ago. That's scary and exciting. It shows that we have a lot of place to grow, a lot of things to build, but we still haven't gotten that attention. Now, obviously, Africa is a scary place for a lot of people who are not African or haven't been there. And I think stereotypes, history, the way venture works, a lot of nonsense has resulted in underfunding on the continent. We also had our first cycle where we had a huge fintech boom, and then a lot of those companies went out of business. And now everybody says that's it for Africa forever. I don't think we have many places where the growth is so unrelated to the investment. So I think, for those of us that are in the market, happy days, we're by ourselves, we're building and we're growing. And I think time will tell that this is the continent where we see so much more growth. And I think just following the South American model, we've seen a bunch of unicorns in South America come into the African continent in the last 18 months. We see a lot of big Southeast Asian companies coming into the African continent. And so, Europe and North America will eventually follow.
So, Guerra, OnAfriq, how is OnAfriq improving remittances flows in the African countries?
Yeah, I mentioned earlier our focus heavily on partnering with layer ones. So we are B2B, we are infrastructure piping throughout Africa. So very little, if any, with regards to retail users. We want to make it super cheap, super easy for our customers, so like remittance players, for example, MTOs, to remit funds to Africa. So one of our partnerships integrating into a layer one, which has resulted in instant settlement between us and the money transfer operator. Boring stuff, right? Like my parents don't give a crap about this, but my mom does know that it takes, if I use an MTO that is plugged into us via this integration that we have, she just knows that it's, I spent less sending her money this month. She doesn't need to know that I spent less, but then using a different app. So the way that we're looking at it is like making tiny incremental impact by doing the heavy work of the crypto mullet, essentially, right? Like fintech in the front, traditional financial services in the front, crypto powering the back end. So we found that to be really, really quite impactful for our remittance business, and it's led to OnAfriq actually seriously taking a investment into crypto, taking it a little bit more seriously.
Thank you so much. Well, with that note, we're going to close the panel. Thank you, Elizabeth, Thales, Nicolas, and Guerra for this, and a big applause for them.